Hello, everyone. Welcome to our K-1 and pass-through entities series. I'm Dave Stauffacher, the senior credit trainer with Lenders Online Training, where we help lending and credit professionals such as yourself say yes to good loans. Now, some of you may know the gentleman joining me here today. It's my colleague, senior credit trainer with Lenders Online Training, Joe Davis. Welcome, Joe.
Thank you, David. Great to be here.
It's great to have you here. You know, Joe, since we've done this K-1 pass-through series, we've received many questions from our viewers throughout, probably over a year now. And today's question, I think, fits the K-1 pass-through series really well. It's what is the difference between a 1065 K-1 and 1120 K-1? 1120S. So they are different. Actually, I recall that we had a live stream on each one of the K-1s and several modules in our curriculum that we talk about that at Lenders Online and our tax analysis curriculum. So, Joe, I think the confusion arises when lenders and analysts, I know the ones that we train often are looking for something on that K-1 and they struggle where to find it. The problem, I think, is they're probably thinking of a 1065, which is the partnership return, and their borrower is actually the 1120S, the S Corporation. Two different entities, different information reporting, despite they still have a K-1 name after them. So I think where I want to start here today is I'm going to talk a little bit about what is the same of the K-1s, other than the fact that they have K-1 in the title. And then we'll touch a little bit about the differences forthcoming. So let's begin with what I think is the same on these two forms. If you look at it, it has information about the entity. I mean, that seems to be the same, the name, address, tax identification number. They have information about the owners. Now, it would be a shareholder if it's 1120S and a partner if it's a 1065. So once again, name, address, a tax identification of the owner. Now, partners, I recall, can be individuals and they can be entities. That's something that we know real well. As far as the 1120S, the shareholders, that could be individuals. It must be individuals. Now, I think on occasion there are trusts that can be there, but I have rarely dealt with that as well. But I know the individuals are key. Thirdly, percentage of ownership. I think that's important. Share of profits. Now, share of profits, this is really the key figure of ordinary income, the share that needs to be transferred over to the individual for tax purposes. Important part would denote is box 1. That's ordinary income. Ordinary income, not necessarily cash flow, but it is consistent on both of them. Lastly, on the top of the form, something that we talk about a little bit is a little box up there that says final K-1. That's on both forms. Now, basically, there's all kinds of stuff on those forms, but most of us that we can ignore as a banker. I think I've often said before that these tax returns are written by the IRS. They're written for CPAs. They're not written for us bankers with regards to cash flow. So there are other things such as ordinary income, capital gains, interest, even other income. Now, these represent taxable income. So we may be interested in that. Quite honestly, if we do need that, I would probably ask for the whole tax return. But in caveat, remember, taxable income is not cash flow. They're not the same. So if we really need all that information, I would just probably ask for the whole tax return, which I will normally ask for it anyways, because I'm just a numbers geek and I like to have that. And then we can look through it from that perspective. So those, in summary, from the K-1, there's a few things that are the same, but it's really a short list of what So, Joe, what are the differences between the 1065 and the 1120S?
Yeah, great. Entities use which form. 1065s are for partnerships and some multi-member LLCs. The 1120S are for S Corps and for some multi-member LLCs. And the reason I say some on each of those is multi-member LLCs can elect to be taxed as either a partnership, an S Corp, or a C Corp. So you can see LLCs on any of those tax forms, okay? But recall also, if you have a single member LLC or a couple that owns the LLC outright. Those are going to flow up through their 1040. So you won't see a separate tax return for them at all. They're called disregarded entities for tax purposes. And one thing I'd point out is 1065 on those, the partners pay self-employment tax on the earnings, whereas on the 1120S, the shareholders may avoid self-employment taxes on distributions or withdrawals. So that's an important distinction and one you should keep in mind as you're analyzing them. And I guess next, let's talk about owner's compensation. Okay, so the 1065 K-1 shows guaranteed payments and distributions. Okay, the 1120S just shows distributions, but the owner can have wages, and you'll see those flow through the 1040, of course. But that's an important distinction there. S Corp doesn't show guaranteed payments as a partnership does. Next, detail about distributions. So most of the time, distributions are cash. Okay, most of the time it's cash coming out of the company and into the owners, sometimes to pay taxes, but not necessarily always. But it doesn't always have to be cash. Could be a vehicle, could be a piece of property, for example. And if you're interested in cash flow, as we all are, you're going to want to know if it was actually cash or another asset that went from the company to the owner. So on the 1065, you get that detail. You can see if it's actually cash or if it's some other sort of asset. On the 1120S, it just combines those two things together. So you won't know if it's actually all cash or if it's some other sort of asset. So if you really want to know, you suspect it might be non-cash, you're going to want to ask for that detail. And then lastly, the allocation of owner's liability associated with the business entity, the details. Okay, on the on the 1065, yes, you get that detail. On the 1120S, you do not. But I would just add a caveat here. I wouldn't recommend using it anyway. It's only their share, the owner's share, and it's usually not current information anyway. So I wouldn't spend a lot of brain cells worrying about those liabilities. You're going to want to get that from another source than the K-1. And then let me recap just an important item about owner's compensation and the owner's actual cash flow. So guaranteed payments, as I mentioned a moment ago, those are expensed. They're treated similarly to salaries and wages. They're tax deductible for the partnership. Okay, withdrawals and distributions, and I use those terms as synonyms. Withdrawals and distributions are not expensed, and they are not tax deductible. So you won't see the withdrawals and distributions on the front page of the tax return. You have to do a little bit more digging. You have to look at the attached schedules for that detail. And also what I just say is all of the above are cash outflows for the company and cash inflows for the owners, typically an individual. So that's important to keep in mind. So no matter what we call it, what line it's on, cash outflow for company, cash inflow for owners. But David, what would you add?
You know, Joe, this is probably me purely an analytical perspective. You know, I'm a numbers geek. Back to when you look at the both forms, box one, we talked about box one as being ordinary income, which is really the share of taxable income. Yeah, I know taxable income and cash flow, not the same thing. But I do kind of look at that on the K-1s. If I have a series of tax returns, 2 or 3 years, I look at that. I look at the trends, because if I don't ask for all the full tax returns, and I'm just looking at the K-1s, just looking at that box, knowing their share, it may give me some insight as to, is the company making money? Because if they're paying taxable income, what you're going to have to pay some taxes on, they're making some money. So I'm looking, is the taxable income going up, going down? Because if they are, that might be a good sign. Might be a good sign because of the fact, well, you need income to generate cash. At least that's old school for me. The taxable income is needed long-term to generate cash. So that's another thing, that there is some same things between the forms, but I actually can kind of look at the relationship as to the long-term longevity.
Great points. You can tell a lot from the K-1s. You can tell if it's a new entity. If this K-1 didn't exist last year and it exists this year, maybe it's a new entity. Maybe it's a startup, or maybe they just bought into it. To your point, if the entity is passing through losses, meaning they had net losses, gosh, am I worried that my guarantor is going to have to put money into that entity? But above all else, I think what you're trying to do with analysis like that, what you're talking about, David, is whether or not I need the full tax return on that entity. Okay, if it's consistent, it's profitable, I'm not too worried about it, and I don't necessarily need it, maybe I don't need that. But gosh, if that profitability is fluctuating, they're showing losses, it's a new entity, I probably want to dig a little bit into that. I probably do want to get those statements.
Excellent point. Excellent. Well, everybody, there you have it. Kind of what is the difference between a 1065 K1 and 1120S K1? Now, today's session is, as you can sense, probably the tip of the iceberg. There's a lot more. And basically, if you want to understand better about K1s in general from each entity type, our entire live stream focuses on a variety of questions in that area. K1s, I mean, there's some similarities, but the question for most of it is the conversations. We focus on many of your questions as you're looking through the paperwork. You just don't know. Reach out and give us a call. If you're looking for some maybe foundational training, kind of to make sense of all this, reach out and give us a call at lendersonline.com talk. You'll get to understand of how detailed we get as you analyze taxes. We get into tax returns. It helps you, your borrowers, helps yourself, maybe even your junior lenders or your entire team to get confidence in you're looking at the financial statements. As a final reminder, we always love your questions, your comments. That's kind of what led to this K1 series. We appreciate that. So feel free to reach out and contact us at experts@lendersonlinetraining.com. It's experts@lendersonlinetraining. I want to thank everybody for coming. And until next time, take care. Have a wonderful day. Bye now.